Hello everyone, and welcome back. Don't forget to subscribe for the latest Bitcoin news and price predictions. Rally for Bitcoin stalled? Economists don't believe Powell's hawkish claims. Yesterday's Federal Reserve, Fed, FOMC meeting turned out to be more hawkish than many Bitcoin investors and the financial market expected. As anticipated, the Fed raised interest rates by 0.5 percentage points on Wednesday. This brings the interest rate to a range of 4.25 to 4.5%, the highest level in 15 years. However, overall, central bankers expect the rate to be higher next year than initially expected, which may have been the biggest influencing factor in yesterday's Bitcoin and crypto market reaction. Fed is more hawkish than expected. The revision to the FOMC dot plot showed that, on average, the monetary policymakers expect to raise the rate up to 5.1% in 2023 before lowering it to 4.1% in 2024. That means the Fed will have to raise the Fed funds rate another 0.75 bits per second in 2023. Whether that will happen in 3 steps or less is something Powell declined to commit to on Wednesday. More important than speed is the question of how high interest rates will ultimately have to rise and how long we will remain at that level, Fed Chairman Jerome Powell said. By the way, if you want to support, please support by liking the video and subscribing to our channel. During yesterday's FOMC press conference, the Fed chairman proved to be extremely hawkish. At least, he tried to emphasize this again and again. Investors had hoped that interest rates would rise less sharply in the coming year and are now worried that the Fed could trigger a recession in the US with its policy. However, Powell stressed that the Fed is determined to bring the inflation rate back to the target of 2%. However, there is still a long way to go before that happens. In addition, the Fed chair emphasized that he wished there was a pain-free way to fight inflation. But there isn't. Economists react to Powell's speech. The fact that the Bitcoin price did not plunge lower after Powell's comments yesterday could also be due to the fact that the market does not believe Powell's words. The Fed's hawkish policies increase the risk of sending the economy into a recession. In this case, political pressure on Powell would increase, former Fed Governor Frederick Mishkin indicated. After all, Mishkin asserted, it would then be particularly difficult to raise interest rates further when the economy was already doing badly. Star investor Jeffrey Gundlach of Double Line Capital expects a recession in the first half of 2023 when the Fed would do an about-face and cut rates again, he said Monday at an online event. The concern that monetary policymakers could do great damage to the economy outweighs the will to fight inflation, he said. Even if central bankers are saying something else at the moment. Lisa Abramovich of Bloomberg Surveillance described the sentiment of many analysts on Twitter as follows: "The Fed, we're hawkish. We have more work to do. The market, got it, so you're doing another step down to a 25 BP rate hike in February and will be cutting rates by later in the year. Got it." Abramovich bases this assumption on the fact that Powell repeatedly spoke of the Fed's best estimates as of today. Powell may have thus given the green light for a 25 basis point hike in February. Tom McClellan from The McClellan Market Report wrote via Twitter that the Fed's rate hike cycles usually end when the Fed funds rate reaches the level that the 2-year yield has already reached. "We have that condition now. So the Fed should stop, but there is no indication that they know that, based on the post-meeting announcement," McClellan wrote, referring to the chart below. The Bitcoin price has seen a strong run ahead of the FOMC meeting but has held up very well despite a hawkish Powell. A look at the daily chart reveals that BTC is somewhat overextended and was rejected at $18,220. Therefore, it seems likely that Bitcoin will have a consolidation, for the time being, looking for a higher low. The area to hold is currently $17,200 to $17,400. Bitcoin analyst says, pivot coming as US inflation eases. In November 2022, the US 12-month inflation indicator dropped to 7.1%, which is far lower than expected. Some analysts turn positive as macro dynamics might be close to pivoting. Getting ready for major pivot. Charles Edwards, Bitcoin analyst and founder of Capriole Investments, took to Twitter to share his estimations of inflation dynamics in the US. He is sure that the inflation peak is in and markets are getting closer to a U-turn. The US Federal Reserve increased interest rates by 50 basis points, bringing the target rate to 4.25 to 4.50%. Bitcoin slipped below $18,000 following the announcement. The US Federal Reserve raised the federal funds rate by 50 basis points, increasing it to a range of 4.25% to 4.5%, the highest since 2007. Today's interest rate decision was largely expected, with traders pricing in such a rise ahead of time. The price of Bitcoin dipped below $18,000 following the news. The central bank said it remains highly attentive to inflation risks. Policymakers projected rates would peak next year at 5.1% before being cut to 4.1% in 2024. That's higher than previously predicted. Bitcoin immediately fell on the news. The leading crypto by market cap dipped below $18,000 briefly, from $18,355 before the announcement. The move appears to be a classic example of buy the rumor, sell the news. By the way, if you want to support, please support by liking the video and subscribing to our channel. The US Federal Reserve has hiked the benchmark interest rate by 50 basis points, which is in line with analysts' expectations. Following the most recent increase, the federal fund rate is now in the range of 4.25% to 4.5%, the highest since 2007. The central bank signaled that it would keep lifting interest rates in 2023 in order to bring down inflation. The median dot from the Fed points to a 5.1% median terminal rate, which is higher than what the market was pricing in. The price of Bitcoin has dropped by more than 3% on the news as the central bank continues to maintain its hawkish outlook. Earlier today, the largest cryptocurrency surged to $18,373, the highest level since November 9 on the Bitstamp exchange. All three major stock market indices also turned negative, with the S&P 500 dipping by 0.5%. Risk assets rallied earlier this week due to cooler-than-expected consumer price index data. Federal Reserve Chairman Jerome Powell called it a welcome reduction in the pace of inflation. Inflation is still far away from the Fed's target of 2%, which likely means that the central bank will not pivot to a more dovish monetary policy. The start of a boredom phase and a bullish run. Powell argues that the crypto market is about to begin a boredom phase, which usually indicates the start of a new bullish run. However, he cautioned investors not to expect this phase to be exact. Instead, what is important is the context behind this phase. The former Goldman Sachs executive further explained that crypto cycles involve an increase in positions following the end of a long-term uptrend. During this phase, investors' fear and disgust are at their peak. However, a boredom phase follows this fear and disgust phase. Powell also said the boredom phase is a period of coming to terms with the market's good and bad news. Thanks for watching. See you next video.